Good morning, it's Jeffrey Christian of CPM Group. It's about 10:15 in the morning of October 4th, Tuesday. The gold and silver prices are up sharply today, as they were yesterday. We've seen a strong rally in gold and silver prices along with other financial assets. Just as we had seen weakness for several weeks, that was across financial assets, stocks, bonds, non-US dollar currencies, other commodities, oil prices, gold and silver. They all fell in concert. And over the last 36 hours, they've been rising in concert. The increase is really a combination of factors. Last Friday in our video, we were talking about how there could be possibly more strength this week in the gold and silver prices, coming off of a very oversold position, as well as in other financial assets. But that the fact that the economy was stronger than a lot of people had thought in the first half of this year was possibly suggestive that the prices could come back off a little bit after this rebound. So this is what's just happened in gold and silver. It's interesting because you're seeing a tremendous amount of bullishness among the gold and silver bulls, but they are always bullish, so I guess it's not surprising. If you look at these prices, and these are prices through yesterday, you can see that the increase in gold prices took us over 1,700, and we're about 1,722 right now. Our expectation at CPM Group is that we could see 1,735 or so over the course of this week. But that prices may back off then, and they may build a new base around 1680 or 1700 for a couple weeks before moving higher. With silver, here you can also see, the price of silver fell very sharply for several months. It has now broken back up above $20. It has risen very sharply. Not surprising given the thinness in the silver market and the relatively smaller dollar volumes involved in that. This title is the same title we used on Friday, although the prices charts were not updated through yesterday and this morning. Possible short-lived rebound, still in the woods. And that's really where we think we are. You're seeing a rebound, as I said, across financial assets because they were so incredibly oversold. There was so much bearishness in the first 3 quarters of this year, and drove everything down. Gold and silver came down with the best of us, including the stock market, the bond market, and various currencies. We've seen the dollar weaken a little bit over the last couple days. We've seen interest rates actually come off. U.S. Treasuries come off in the last couple days. We do think that, what you're seeing is that people are looking at some of the factors. Yesterday, it was the ISM index, the manufacturing index of orders and inventories, and you saw weaker than people had expected, which suggested to financial markets that their bearishness about the economy because of the likelihood of stronger and higher and longer increases in interest rates and a stronger dollar were perhaps overblown on the upside. And you saw a very urgent increase in short covering and fresh long building across financial assets. Today, you had jobs openings figures, and they came in weaker than expected. Thus, we would not be surprised to see the price continue to be volatile. As I said, we could see gold at 1735. I think we're looking at silver possibly rising as high as 2140 over the next few days before backing off. And I should say, this is pretty much in line with what we've been saying for about 9 months as to what to expect. Weak summer months, and it's increased into September because of the stronger increases in interest rates and the more forceful anti-inflation policies at the Fed than the financial markets consensus had. We do think that we are seeing an end to this base building and we'll move back up. We're not looking for a sharp increase, but we are looking for gold to continue to consolidate largely between 1680 on the downside and 1950, maybe even $2,000 on the upside over the last 3 months of this year and into early 2023. And similarly, we're looking for silver prices not to run away to the upside. We're not looking at $30 in the next quarter, but we wouldn't be surprised to see $22 or $23 as the market starts to move higher. You are in a situation where economic activity is stronger than a lot of people had thought, but weaker than we would like to see. We do seem to be slouching toward a recession. That recession may not occur for another 5 quarters or so. It could appear at any given time. You still have a lot of unknowns out there. Last Friday, I mentioned 5 political factors. One is the Chinese Communist Party Congress, October 16th, and what might come out of that in terms of reforms and changes in Chinese government policy. Second one is the U.S. midterm elections on November 8th. And the third one is what's going to happen with Russia's invasion in Ukraine. And we sent out a tweet yesterday that said, the most important thing in the Ukraine invasion now will not happen at the front lines in the Ukraine, but rather at the Kremlin in Russia. And that's really the core of it. You also have the UK government fumbling around looking for the ball that they've dropped. And you have ongoing European Union issues that will come to the fore and probably continue to be prominent disputes within the European Union for several quarters to come, if not beyond that. So you have those factors that could go either way. And resolutions, changes in the Chinese Communist government's policies, changes in the U.S. government, changes in the Russian government. All of those factors could take gold and silver prices down shortly on a short-lived basis until people realize that they're moving through a period of uncertainty, and then they probably want to rebuild their gold and silver positions. So we're hanging by our expectations that the prices start to move somewhat higher over the course of the 4th quarter, but it may not be in the first 2 weeks of October. We're seeing strength now. We wouldn't be surprised to see some of that strength cool off over the next several weeks. But then we're looking at stronger prices on a longer term basis still. That's all I have for now. We probably will do some videos on Friday of this week and Tuesday of next week. Various members of CPM Group will be out of the office on those days, but I think what we'll probably do is try to pre-record some videos on Wednesday about issues that are germane and can survive a week in the can without becoming obsolete in this crazy financial markets that we're seeing. Take care of yourself and those around you, and watch out, because the world is a treacherous place right now.